via Tech Wabag. It's been a mixed set of quarterly numbers. Let's get on board Rajneesh Chopra, who is joining in on the show. Thank you so much for taking time out. To begin with, it's been a little bit of a mixed set. Revenues have been low on account of muted growth in the European business. What are the other reasons that led to the decline, and what's the outlook on your top line growth?
As far as our first quarter performance is concerned, I think what you have seen is a small dip as far as top line is concerned. But if you see in our last 3 quarters, what we have been talking about is that our focus has been purely on the bottom line. And that is something where you see there is a substantial growth. Now, if I have to look forward, I think what some of the key reasons where you saw a small dip as far as top line is concerned was on account of disinvestment of our 2 European entities. So that's one reason. The second is, our mix of order intake. So we have been focusing more on EP. So when we do not have EPC, obviously, it is more focused on margins and bottom line. So that's the second reason. And your main question that, how does it look going forward? I think in recent past, you would have seen that we have 2 EPC contracts. One is the largest desalination plant, which is 400 MLD in South Asia. So that the commencement of that execution will begin. The second one is Pagla STP, which is one of the biggest STPs as far as Bangladesh is concerned. So once the commencement of these 2 major EPC contracts begin, I think you will see a growth in top line as well as a substantial growth in the bottom line as well.
Your margins have seen a contraction on a sequential basis. Do you expect margin improvement trend to continue going forward, or do you see some ease off coming in there? And then does your guidance on double-digit EBITDA margins for FY24 stay intact?
I think we will definitely be able to achieve very close to a double-digit this thing. Even if you see in the current quarter, it is at 9.8%, which is not far from a double digit. And historically also, if you see our first quarter always has been a little muted. And as the year progresses, I think you will find that there will be growth both in top line and bottom line, as I said before.
And your order book stood at about 12,500 crore rupees. What is the kind of revenue visibility and what is the guidance that you have on your order inflows?
So we have not been giving any guidance post-COVID. So I will not be able to comment on exact figures. But all I can say is that as far as top line is concerned, definitely there will be a growth, compared to the last year. And that is quite evident from the order backlog which we are carrying, which is at a historic high tempo. As far as new orders are concerned, all I can share at this point of time is that, our order intake will definitely be more than what we are going to execute this year. And if I look at order pipeline, I think we are very, well poised in a couple of orders to the tune of 1,500 crores. And maybe we are actively bidding in, contracts into the tune of 6,000 to 7,000 crores in the coming quarter.
Right. So would you like to scratch that point a bit further? Are there any significant tenders under consideration that, could translate into firm orders, you think?
Yeah, as I just now said, I think we are well placed in contracts to the tune of 1,000 to 1,500 crores.
And we have been talking to various capital goods players, the likes of Thermax and Cummins, etc., and they have said that they are cautious on the global front. Given that 50% of your revenue comes from the international market, how are your client conversations coming along? Are you also a bit worried?
See, we have not really experienced other than Europe. And you would have seen that our Europe growth is quite muted. Other than that, we find that there are enough of opportunities as far as our major markets are concerned, which is Middle East, Africa, and Southeast Asia. Also, if you recall that in past, while interacting with you, I have commented that we are even focusing on Russia. Now, Russia is one market where we are already executing a large EP order. So I think there is an opportunity in Russia. So going forward, I do not foresee. I think we should be getting equal amount of business from overseas as we get from India.
So since you mentioned the Russian project, how's the execution, getting along, and is the company bidding more such orders in the region?
Yes. As far as our execution of Russia project is concerned, now it has, they picked up the pace. There were challenges initially because there were a lot of equipment here which was to be sourced from countries which had sanctions. So we had to rework on all the logistics arrangement, rework on all the major technology suppliers, and that's already done. And now it has picked up this thing. And even in first quarter, probably, we've seen, traction happening in execution. As far as other orders are concerned, I think there are a couple of orders which we are seriously considering as far as Russia is concerned. But all these orders will remain design, engineering, and procurement. We are not going to do any construction business as far as Russia is concerned. And even in a lot of overseas geographies, strategically, as we have stated earlier, we'll be more focused on EPC, EP, not EPCs.
All right. Thanks very much for joining in and sharing with us the outlook on your business. That's the management of Tech Wabag.